This week in the parish of Bourses and market structure, NSX Advances, Texas Funds, NSE IPO kickoff, and Arca meets T+50 years. My name is Patrick Elliott. Welcome to the Bourse Business Weekly Digest. It's the Exchange Invest Weekly Podcast, episode 341. Good day, ladies and gentlemen. This is a very brief reduction of highlights amongst the key headlines from the week in market structure. All the analysis of the many events and happenings from the past 7 days can be found in Exchange Invest Daily Subscriber Newsletter, the unique guide to the Bourse business sent daily to your inbox. More details at exchangeinvest.com. As we move further down Young's pyramid for Q1 2026, we offered the Tier 1 review last week. Turning our attention to Tier 2 at the top of that group, the hierarchy remained largely unchanged. Nasdaq leads, albeit the German Bourse Group DB1 has crept up again to within $1 billion in market capitalization, $47.5 to $46.5 billion respectively. The crypto exchange Coinbase is in third place on $42 billion, and then it's a drop to SIBO just under $30 billion and TradeWeb at almost $25 billion, which one must presume helps underpin the Tier 1 stock LSEG, which holds around 54% of TradeWeb stock. Interestingly, Euronext now equates in market cap to Brazil's incumbent monopolist B3, albeit B3 now faces increasing domestic competition. That's at around $16.4 billion. That's a huge testament to the work of CEO of Euronext, Stefan Buchner, and presumably makes the idea of a Euroclear merger of equals more plausible along the line. Over in the crypto world, tolls were being discussed this week. Tehran is still ruling Iran and now has a cash flow without touching the USD, thanks to the crypto tolls on the Straits of Hormuz, as Iran demands crypto fees for ships passing Hormuz during the ceasefire. If you enjoyed this excerpt from our crypto newsletter, you can pick up the entirety of BitCarnage for real-world assets, DLT trading and more via Substack, or alternatively, you can also subscribe to Exchange Invest Daily and receive BitCarnage as part of that package. More details at exchangeinvest.com, or alternatively, via Substack, you can look for BitCarnage. In our main legacy exchange stories this week, Goldman Citadel have been clashing with brokers over options clearing. To understand the nature of default funds and CCPs, this week we were delving into none other than The Hitchhiker's Guide to the Galaxy. Douglas Adams memorably explaining somebody else's problem fields, a funnier version of the bystander effect. Placing that in perspective, the permanent bickering of who takes responsibility for creating risks in CCPs can be much more easily comprehended, as in this case of the OCC, where accountability is running straight into capital required and thus everybody involved has a bonus pool concerned. QV, we had some wise words we picked from a LinkedIn this week from the former OCC boss, John P. Davidson. Would it be prudent to have a CCP clearing fund assessment in the midst of a systemic financial crisis? He asked. As has been well documented, financial institutions in crises are always a rich source of additional collateral. Oh, wait. Thanks for listening to Exchange Invest Weekly. We welcome your feedback. You can contact me directly, patrick@derivativesvision.com, with any comments. Meanwhile, if you enjoyed this show, we would welcome you giving us a thumbs up. Or, if you have time, a positive review will always be welcome, wherever you find this podcast. Meanwhile, as the Texas Stock Exchange looks towards funds to be its first listing when it launches in July, there are exciting plans for an active rival to the ASX, the Minnow National Stock Exchange of Australia, NSX, freshly taken over by Canada's operator of the CSE, its parent CNSX Global Markets, with ongoing NSX CEO Matt Cunningham now seeking to attack the ASX monopoly. An interesting logical play in the context of a tech upgrade too, which we'll get to in just a moment. Nonetheless, it is truly going to be a David versus Goliath contest. At the same time, the media pile-on seems to be taking place left, right and centre against ASX and its failed monopoly. The New York Stock Exchange this week, they celebrated 50 years of NYSE Arca's options trading. Few now recall that PCoast, the Pacific Coast Stock Exchange, was an early options adopter alongside the existing West Coast stock franchise headquartered in San Francisco. Ultimately, PCoast's owner Archipelago enabled the NYSE to go public when John Thane was CEO before the Duncan Dark Age. Anyway, in 1976 this week, PCoast entered the US national market for stock options, and that was celebrated on Friday the 10th of April at NYSE on the East Coast. London Stock Exchange, they've commenced a buyback programme for up to £900 million of stock. And Thomas Petterfee, echoing some comments we've been making recently discussing whether or not inside trading bans were really working, he said there should be no bans on insider trading as he endorses the concept of transparency and all information within the stock, as well as discussing the prediction markets. All those stories and more were in Exchange Invest Daily this week. Sign up via exchangeinvest.com. And of course, the big IPO is looming. Exciting times. CNBC TV 18 in India reckons that NSE is likely to file their draft red herring IPO prospectus by the end of June 2026. That's significantly earlier, 6 months at least from indications by NSE management at the tail end of 2025. An IPO could be looming by the end of the year, possibly even as soon as Q3. Meanwhile, the changes to the regulatory regime in a new bill pave way for SGX Nasdaq dual listings, which is certainly a very interesting move for the Lion State. Coinbase, they've won the OCC nod for a $376 billion institutional custody empire. That's OCC, the officer of the controller of the currency, by the way, not actually the one related to options clearing we were talking about earlier. Banking, behold, Coinbase is coming. At the same time, this and Kraken's being open to the discount window via the Fed and more services is raising concerns about systemic issues within crypto and legacy finance alike. Interesting cross-border discussions this week in Africa. The NGX Group of Nigeria leading a dialogue across African exchanges and engaging with the Dangote Empire discussing cross-border listings. New markets, two fascinating new markets this week. First up, Morocco have launched their financial futures trading, rather a milestone in derivatives being introduced in the Casablanca Stock Exchange, while in Nigeria as well, the Nigerian Commodity Exchange has been inaugurated to boost trade in the rail economy. If you fancy some financial insights with moving pictures, don't forget, check out our live stream Tuesdays 5 o'clock London, midday New York time. It's the IPO video live show. Catch the back episodes on LinkedIn and YouTube via IPO-VID. No IPO this week as we're still celebrating the Easter holidays, but we do have a book of the week. More Money Than God, Hedge Funds and the Making of a New Elite by Sebastian Mallaby, telling the insider story of the hedge funds from their origins in the 1960s to their role in the financial crisis of 2007 to 2009, explaining why understanding the history of hedge funds is key to predicting the future of finance. Over in product news, India's national stock exchange, as well as preparing for the IPO, they're launching a Platts-based crude futures in a tie-up with S&P Global, at the same time as the CME Group is continuing its expansion of regulated crypto trading with the launch of Avalanche and Sui futures. The irony of crypto there, of course, is that the biggest trading market on earth for crypto is increasingly absolutely not on a distributed ledger. It is rather the CME. How does that lead to distributed nirvana after the Brotopio fashion, I wonder? In the week, ICAP launched a new global dry forward freight agreement desk. There was an increase in competition for container futures as both ICE via NYSEX and Euronext announced intentions to pursue new container futures contracts. Technology news, as I teased at the top of the show, the National Stock Exchange of Australia, NSX, have selected Aquis's Equinox technology to bring world-class trading to Australia and Australia's smallest stock market. Exciting times and a handy breakthrough for Aquis Exchange, whose appointment of formerly Australian-based tech guru John Greenan appears to have paid off as an added dividend with a sale to the newly rejuvenated through acquisition by Canada's CSE, third player in the Antipodes' largest market. From that great win for Aquis to controversy at the SEC, they announced their enforcement results for fiscal year 2025, although some people were cynical about what was being said within the report. At the same time, the SEC has appointed David Woodcock as Director of the Division of Enforcement. That is the man who is replacing the previous boss of enforcement, who left, Margaret Ryan, after only 6 months. Securitize, meanwhile, they've appointed a previous SEC Director of Enforcement, Brett Redfern, as President and member of the Board of Directors. He has come from, post his SEC career, being head of capital markets at Coinbase. And that leaves us to point out that a recent OECD study may just have put its finger on quite why the European Union is facing ongoing atrophy. No fewer than 3.9% of EU employees are engaged in compliance functions, whereas with 1.7% of the workforce engaged in research roles, it's easy to see that 2.5 times as many people in what amounts to health and safety for business is probably not the best way to develop an innovative economy. And on that mysterious and magnificent note, thank you for listening to this EI Weekly Podcast 341. Join us daily via exchangeinvest.com, or if you have a new exchange you'd like built, get in touch. My name is Patrick L. Young, and I wish you a great week in life and markets.
This show relates to the business of Bourses. It is not to be construed as investment advice, nor are we making any investment recommendations. Please consult an investment advisor before you make any investments, and for goodness sake, do your due diligence and do not make investments without complying with the regulations in your home state. Exchange Invest cannot be held responsible for any investment decisions made as a result of our program, which is for entertainment purposes only. The material herein is copyright Patrick L. Young at the date of publication, while our music and sound effects are sourced from copyright-free sources. Thanks for listening to Exchange Invest Weekly, the exchange of information.